pleasure to be speaking with all of you today. Our goal of this presentation is explain what BOI reporting is, determine whether or not you need to file, and ultimately get all your questions answered and provide you with the solutions to file most efficiently, not just initially, but going forward. We've really valued our partnership with Alignable. It's an amazing platform that's really looking to educate and provide solutions to SMBs as they look to get back to running their business and certainly not paying these unnecessary government fines that are a result if you fall out of compliance with this new law. Randy provided an excellent background on myself. My partner and I founded this business 2 years ago. He comes from a CPA background, formerly at Alvarez & Marsal as a global tax and compliance expert. I come from a private equity and investment banking background in the financial services and technology space. And ultimately, we founded this business 2 years ago. We're based in South Florida. All of our teammates are based here in the US, spread throughout the country. We have CPAs, attorneys, and industry professionals on staff to provide the necessary support and technology solutions to allow folks looking to stay compliant with this new law to efficiently reach the specifications and requirements for information disclosure. We do provide a platform. In fact, our platforms won a few awards from the accounting and legal communities, in addition to being SOC 2 compliant and having a direct integration with the federal government to ensure instant and secure filings of BOI reports. So thank you so much for the opportunity to present and get your questions answered. So just to get into it, a lot of folks might be curious why this law exists. What's this law all about? Well, this law really came to fruition to help prevent money laundering that's been going on in the United States for quite some time. In fact, money laundering is a multi-billion-dollar, some would say trillion-dollar issue in the United States. There's a lot of money laundering that goes undisclosed. But effectively, these money laundering that really is done a lot of times through anonymous shell companies that can easily be formed at this point in the United States. These shell companies can be used for tax evasion, funding terrorist activities, and other illicit activities that ultimately the United States government is trying to crack down, as other global economies have. So the United States kind of been a lagger with respect to this type of information disclosure, and ultimately is looking to kind of elevate the reporting standards in the United States. And really the fight begins by FinCEN, who's probably an agency that not a lot of folks have ever needed to report to or pay attention to, unlike the IRS, for example, despite the fact that they're both part of the Treasury. FinCEN has really never had any jurisdiction over small businesses. The agency was really formed in the early 90s to police the financial system, and really kind of had an initial focus on kind of banking and real estate, but now is extending their kind of coverage of small businesses through this new law. So effectively what the government is looking to do is aggregate all of the information of the private companies that exist throughout the United States and understand who their beneficial owners are, the individuals affiliated with the entity that control the entity. Will provide more formal definitions of what is a reporting company, a beneficial owner, so on and so forth. But hopefully that's helpful context with regards to the premise of this law and who's enforcing it, and how important the data is, because effectively the data will be used by various government agencies and some select financial institutions to really better police the economic conditions and kind of the economy broadly speaking within our country, and make it more challenging for illicit actors to use shell companies for committing crimes. But the Corporate Transparency Act really passed a few years ago in 2021, rightfully so. The nation of small business owners and the like were rightfully consumed with the COVID pandemic. People focused on keeping their lights on and staying healthy rather than reading the Federal Registrar as a law passed kind of under everyone's nose. But the law did pass and effectively gave the United States business owner 2 years to kind of get compliant and educated upon going into effect January 1st of 2024. The law is mandating BOI reports to be filed by reporting companies that will need to disclose company and ownership information. Existing companies that formed prior to January 1st of 2024 have until the end of the year to get their initial report in. Companies formed during 2024 only have 90 days to get their initial report in from their formation date. So a lot of folks might find that they're already missed their deadline if they form this year, or anticipating a deadline in the next 63 days. So want to help educate and make sure you guys have all you need to file and understand kind of some of the considerations to keep in mind. So the CTA is important to note that this is more of a blanket or sledgehammer than a scalpel, meaning this is really affecting nearly every private company in the United States. In fact, nearly 33 million, or some would say even 40 million businesses will need to report by the end of this year. Very small percentage have filed so far. But effectively, this is a law that's impacting the mass majority of businesses throughout the United States, and really the government has dropped the ball on awareness, and that will really fall to CPAs and other lawyers and supporters of small businesses to answer a lot of the questions, because FinCEN just doesn't have the resources or support to really answer all the questions in real time as folks look to do their initial filing. But FileForms was effectively created to serve all folks, whether you're a business owner or a practitioner looking to file for clients. But it's important to note just how broad-reaching this is. A lot of folks are like, "Oh, FinCEN, that's only applicable to financial institutions." Nope, that's not the case. This more than likely applies to you. So it's important to kind of keep that in mind. So just to kind of recap, kind of current state of play. This law went into effect on January 1st of this year. FinCEN does offer a portal to disclose this information, or also offers PDF documents to do it in a more static manner. As I mentioned, new businesses formed January 1st, 2024 or beyond have 90 days to comply. Businesses formed prior to that have until the end of this year to file their initial report. And then businesses formed in 2025 actually only have 30 days from their formation date to file. And then furthermore, this is not just a one-time filing, and it's also not an annual filing. So this is a little unique when it comes to compliance that I think a lot of folks are used to being on a more periodic basis. But this is an initial filing with a lot of information. And then if any of the information changes at any point, you need to re-report the information on a BOI report with the updated info within 30 days of the change. So that's a very important point, that this is a perpetual kind of data monitoring exercise for business owners. So keep that in mind when you're considering what the best approach is to file, and we obviously offer a way of doing it very easy. So you might be asking yourself, what exactly is on this report? What do I need to disclose? What information do I need to gather and file with the government? Well, there's reporting company information, and then there's beneficial owner information and company applicant information. So reporting companies, they need to disclose the company legal name, the DBA, the trade name, if applicable, the current physical address of the business, the jurisdiction of formation, and the federal tax ID number, or EIN or ITIN, depending whether you're a domestic or international company. So a lot of that information might seem pretty straightforward. If you don't have an EIN, I highly recommend getting an EIN. If you don't have an EIN, FinCEN will accept an SSN, but really has a strong preference for the EIN. So that's one point that might be worth noting for folks to seek to get an EIN before filing their report. Just one less thing to do, and it will help kind of make the filing process a little bit easier when you get started. And then there's beneficial owner and company applicant information, which we'll provide definitions on. But effectively, those are individuals that are affiliated with the entity that's disclosing, and those folks will need to file their name, their date of birth, their address, the unique number on their government-issued identification document, such as a passport or driver's license, and then also an actual image of that government document. So a lot of folks might not be comfortable sharing, passports, IDs, driver's license over email or text message for all the right reasons. There's a lot of cybercrime and privacy concerns to be had there. So our solution actually does provide a more streamlined and secure way of disclosing that information. But You might ask, initially, what is a reporting company? Does this apply to me? Chances are it does. So there's two types of reporting companies. There's domestic reporting companies, and then there's foreign reporting companies. We'll start with domestic. To start, a domestic reporting company is essentially any type of legal entity that is formed or registered with the Secretary of State or similar offices, including a tribal organization. So that could be any type of corporation, limited partnership, limited liability company, general partnership if registered. But that does not include sole proprietors or DBAs that are simply registered just to use a trade name, or isn't registered at all if you're a sole proprietor. So that tends to be kind of a knee-jerk reaction from some folks. But it's really important to note whether you're filing a document with the Secretary of State. That will really determine initially if you're a reporting company or not. Examples include Delaware limited liability companies, California for-profit corporations, Florida homeowners associations, Texas general partnerships, etc. Next, you might ask, what is a beneficial owner? So a beneficial owner, once again, there's two types. There's a beneficial owner as an individual. So a beneficial owner cannot be an entity, but it's an individual that either directly or indirectly exercises substantial control or key decision-making power over the business, or it could be anyone who directly or indirectly owns or controls 25% or more interest of ownership in the business. So once again, there's two types. For example, it could be a husband and wife that own a store, say 50-50 through an LLC. Both of them would be beneficial owners based on their ownership percentage. Also, say a COO, for example, of a 10-person tech company operated through a corporation. So despite that COO having potentially no ownership or less than 25% because they're COO and making key decision-making on behalf of the business, they would also be considered a beneficial owner. Board chairman of a UK-based multinational business that has an operations in the US, that would also be considered a beneficial owner. If you're a foreign entity and you're doing business in the United States and you're registered to do business in the United States, that means you're a foreign reporting company, which means that, once again, you'll have to determine who your beneficial owners are and ultimately file a BOI report with the federal government. Here's a more detailed view of the breakdown of the beneficial owner definitions. So if folks want to take this offline after the presentation and dig deeper, but I think a lot of folks tend to want to dig deeper into the substantial control category because it's a little less direct than the 25% threshold. But as you can see, substantial control would include a president, a CFO, someone whose ability to remove a senior officer, for example, important decision makers, in the finance or business departments of kind of the operation. So there's certainly kind of different buckets that folks get qualified as a beneficial owner. And, I want to emphasize that it's safer to disclose more information than less. There's no penalty for over-disclosure. So if someone's on the cusp of, say, 25% interest or on the cusp of being a somewhat key decision maker, it's better to disclose more information than less, and there'll be no penalties for that. Next up is another defined term called a company applicant. So a company applicant is disclosing the same level of detail as a beneficial owner. There's two types of company applicants. There can be up to two, I should say, company applicants on the form where there can be unlimited amount of beneficial owners. A company applicant is effectively anyone who directly filed that creation or registration document to form the entity originally, or is directly responsible for controlling the process of that documentation. It's important to note that company applicants only apply to newly formed entities as of 2024 and beyond. So if you formed an LLC 15 years ago and you have no idea how it was formed and you just don't remember, fortunately, you don't have to go back and reconcile that. It's only for new businesses that need to disclose the company applicant. So that's a key piece. I think it's also important to note that a lot of company applicants may use FinCEN IDs, which is a unique identifier that can be applied for on login.gov. Effectively, a FinCEN ID allows you to disclose your information once, get a 12-digit numerical code to use as an alternative to disclosing your information on every single BOI report that you are a beneficial owner or company applicant for. So if you do have a lot of entities, that is something that folks will pursue, but certainly not something that's required by any means. Some would consider it an extra step. So now you may ask, well, do truly every single entity out there need to file, or perhaps there's some exemptions? So there are 23 total exemptions, which seems like a lot, but effectively I like to break them down into specific categories, 6 specific categories for that matter. And the premise of the exemptions is to reduce the need for redundant reporting. So if you're a business that's, for example, already in a highly regulated industry, for example, such as banks or utilities or insurance companies or PCAOB accounting firms, for example, or doing public audits, those businesses are already highly regulated, and the government has good amount of clarity on who is actually making the controlling decisions or owning those types of entities. Furthermore, publicly traded businesses, for example, will not need to disclose their information. Obviously, the government has clarity on that side of things. Certain registered or large investment companies, for example, clearing agencies, venture capital funds, pooled investment vehicles, or anyone already disclosing with the SEC would not have to file a BOI report. Specific tax-exempt entities is the next category. So obviously, there's a bunch of boxes that need to be checked to meet that exemption of paying taxes, so thus no need to disclose that information on a BOI report. The large operating company exemption is certainly one of the more prevalent out of the 23 exemptions. So this large operating company threshold has 3 thresholds that need to be hit. So one is based on full-time employees, so 20 or more full-time employees, and an operating presence in the United States, and 5 million or more in gross receipts. If all 3 of those parameters are met, then the business is deemed a large operating business and will not need to file a BOI report. They'll be deemed a large company and ultimately exempt. And then the last 2, subsidiaries of certain exempt entities are also considered exempt. That has a lot of nuance to it, so I would definitely follow up with us directly if you think potentially you are a subsidiary of an exempt entity. And then inactive entities as well. If an entity wasn't formally dissolved or has had nearly no transactions and has been, for the most part, dormant completely, perhaps will be considered an exempt entity if it's fully inactive and dissolved. So there's a lot there. Certainly appreciate if there's questions coming out of that. Randy, keep me honest here if there's folks in the chat that need support, but if not, we can keep going and wait till the end.
Yeah, let's wait until the end.
Perfect. So you might ask, now that you know kind of what needs to be reported and who needs to report, what is this refiling? Is this a one-time thing or is perpetual? So I kind of alluded to it before, but companies will need to submit change of information to effectively correct any errors that come to a head, or potentially update information that changes. So there's a lot of different changes that can happen. Obviously, you saw the list of information. So if a name changes or an address changes or a C-suite executive changes or the ownership group changes or someone gets married or passes away, there's so many potential changes that are out there. Any of those changes will need to be refiled with the government within 30 days of the change. Otherwise, the business will be deemed uncompliant. So it's important to kind of have a process in place or a solution that manages this for you. Current state of play right now, you might be asking, wow, this seems like a lot. It's impacting nearly every business in the United States. How is this not as popular as taxes? Well, that's a great question. To no surprise, FinCEN is understaffed and has never done this before, and certainly has a lot less resources than the IRS. All that being said, only about 6 million out of the 40 million businesses that need to report have actually filed a BOI report so far, and obviously there's only 63 days left in the year. So with only 15% of companies filing to date, there will certainly be a lot of forms filed by the end of the year, probably 30 to 35 million forms will be filed or need to be filed. Otherwise, folks may face penalties that are very significant. The penalties we'll cover here shortly, but they're certainly penalties that you do not want to pay. And like I said, there's less than 70 days to go until this deadline. So really the time is now to get compliant, to kind of take this information in, figure out who's your beneficial ownership group. And fortunately, Alignable is offering a great opportunity to file with ease. But as I mentioned, there's also the ability to file on the FinCEN portal. But we'll say that there are some considerations in doing so. Generally speaking, folks feel that the FinCEN portal is a long, time-consuming process with very little education built in and very little support, which can lead to errors. So generally speaking, FinCEN isn't providing kind of convenient, intuitive user experiences like FileForms and Alignable is able to provide you. They're providing you government jargon, 93 pages of the law that you're on the hook for reading and finding time to do so as you run your business. It's unlikely businesses will truly take the time to educate themselves to the degree they need to in order to file. And, given the lack of more efficient means of awareness, this is leading to filings taking up to 1 to 2 hours per report. If you already know a lot about BOI reporting and know who your beneficial owners are and you have a very simple structure, perhaps it takes less time than that. But if you think about all the different components of learning what the law is all about, then collecting the information securely, and then ultimately reporting it and then maintaining it, chances are it takes certainly 1 to 2 hours all in to kind of do this correctly and then maintain it going forward. There's also a massive margin for error. As I mentioned, there's not a ton of education built within the FinCEN portal. It's a very static kind of bare bone experience, very unlike kind of TurboTax or some of the other modern fintech businesses out there. There's no kind of hand holding through the process either. There's a complete lack of support. FinCEN just doesn't have the resources to spin up call centers or efficient means of chatbot to answer questions in real time. So whether you're filing for clients or filing for yourself, you certainly are going to want to do this correctly, given how significant the fines are. And if you choose to file in the Alignable FileForms partnership, not only will you get a preferred price, but you also will get guidance every step of the way, which I think is super important for doing this correctly out of the gate, so you don't have trouble and you can effectively get back to running your business. So that's really why Alignable and FileForms came together. Alignable has a terrific network of small businesses, over 9 million businesses that we're looking to serve in any way we can, whether it's with education, filing solutions, or support. We're here to help and effectively make this as effortless as it can be. FileForms has partnered with a variety of communities, organizations, small businesses. We work with over 1,000 professional services providers and tens of thousands of businesses today to provide our filing solutions in an easy-to-use experience that honestly will get you compliant in 10 minutes and allow you to get back to running your business. With that, we can see here what the FileForms experience looks like. So whether you have one entity or several entities, you're provided with a dashboard and a very intuitive user experience to file with ease. We also have a quiz that allows you to determine whether or not you're exempt very easily. It takes no more than 2 minutes to fill out and is very interactive. And this platform is really built to almost be dummy proof to some extent. Certainly want everyone to feel as educated as possible in this process, and I think our platform really does instill that because it's got a lot of data validation built in. There's tooltips every step of the way. If there's any defined terms that don't make sense, you're easily able to get support. And our team is on standby. In that bottom right corner, there's a chat bot where our team is answering questions in real time.